Hello, and welcome to the May Market Update from Commonwealth Financial Network. My name is Brad McMillan. I'm Commonwealth's Chief Investment Officer. It was another good month for world financial markets. U.S. markets were up a bit, not a lot, but a win is a win. International markets did even better. So equity markets continue to validate the fact that things are actually pretty good. Interestingly, though, what happened was markets were down around the world for the first 3 quarters of the month, only to rally strongly in the last week. The question is why, and the answer is the French elections. And that actually gives us some good insight into what's going on right now and what we can expect over the next month. So let's start with the elections themselves. There was a real concern, a real worry that the candidates, both candidates, were going to end up being anti-European, which would have been very disruptive. In fact, it didn't turn out that way, and markets went back up when that worry was relieved. That tells us two things. First of all, it tells us that politics can indeed knock markets down. In other words, that the worries that markets really have are political. Second of all, it says that absent those political worries, the economic foundations are actually pretty sound. And that's what really drives markets. Now, that's not to say everything is rosy. Here in the U.S., for example, although the economy continued to grow, the first quarter growth was actually well below what had been expected. Is this something to worry about? It might be, but probably not, or at least not yet. The reason for that is simple. In the past 2 years, we've had first quarter growth come in quite low, surprisingly low. Third time in a row, it's not actually that much of a surprise. And in the past 2 years, we've seen economic growth actually come back strongly, which is what I expect to happen this year. Now, there are some additional concerns here. Although confidence remains very high, the actual data isn't as strong. In other words, people say they feel good, businesses say they feel good, but they're not yet spending at a rate that says, yes, things are really good. That's something we need to keep an eye on. But the reality is, even if we don't see growth acceleration, we're still likely to see continued growth, and that alone will support the markets. Second of all, if you look abroad, we're actually in the first synchronized global upturn since the crisis. Everybody's growing, not just the U.S., and that actually gives us a substantial amount of additional boost. So when you look at the global economy, despite some concerns here, the news remains good and getting better. From a financial market perspective, again, especially here in the U.S., the news is also pretty good. We're seeing earnings continue to grow. We're seeing earnings grow abroad, and this is something we haven't seen since the crisis. In other words, from a fundamental perspective for the stock markets, things are also getting better. So we finished the month, after some real concerns, up. This is positive. The economy, despite some real concerns, is likely to continue to grow and may even accelerate. In other words, although we do have a bit more worry here in the picture than we did, nonetheless, the situation remains positive, and chances are favorable that we're going to continue to do quite well. But we will see, and I will talk to you about it next month. Thanks for watching.